Hello, good evening. It's Adil Fazal here, market analyst at CFDs.com, bringing you a video of the FTSE 100 end of day analysis. It's the Wednesday, 25th of November 2015. Okay, let's start. Be sure to visit CFDs.com, your specialist in spread betting and CFD brokerage, www.cfds.com, and certainly learn more about the products and services. Alternatively, there's the educational site as well, www.csds.education. Okay, in terms of the FTSE 100, let's try and decipher this and see exactly where we are headed. Okay, so the actual market close itself, the FTSE 100 certainly finishes positive, up 60 points, by almost a percentage, and the gain was mainly led by the UK home builders. You can certainly see an article here, helped the FTSE 100 higher as the government announced a series of measures designed to build another 400,000 homes. Taylor Wimpey, Barratt Developments all strengthened by around 3 to 4%, and were one of the both companies in the top 5 risers on the index. So Mr. George Osborne, the Chancellor, pledged to reform planning laws, etc., etc. Overall, the blue chip index closed at 1%, etc., etc. Okay, so in terms of the market movements, that's the explanation. Even though we had the oil prices dropping earlier on, copper dropping, the dollar certainly rising based on terrorism and obviously geopolitical fears and the ongoing standoff between Turkey and obviously Russia. Not only that, obviously the additional terrorism concerns and the uncertainty concerns with regards to the markets themselves. So there was a lot of reasons for a risk-off scenario, okay, in the market this morning. Now, in terms of the economic data as such, in terms of the data itself affecting the FTSE 100, other than Mr. Osborne's speech, there wasn't really anything as of today. We did have mortgage approvals, but that wasn't a major market movement. Okay. Now, in terms of the actual US data, we had personal spending worse than expected, so therefore that was bearish. Okay, that was the important aspect, and we had consumer confidence certainly dropping in America as well. So again, that's certainly bearish for the FTSE. On the other side, we had stronger PMI data out of the US, stronger durable goods, and jobless claims. So a mixed set of numbers. Okay. Now, in terms of the actual oil price, because as we all know, the oil price certainly plays a major factor here. The oil price, the actual supply data, API, certainly came out negative for the actual price of oil, so i.e. higher stockpiles, etc. So supply concerns obviously took center stage again, and that obviously was supposed to, or was expected to, send the price of oil lower. It did to a large extent before geopolitics came back into the equation, and that sent the price of oil higher. So always remember, the rally in commodities based on geopolitical fears is not always positive for the FTSE 100. It can be short term, but it's not one that lasts. There has to be organic strength in order for the FTSE to certainly start to rally. So that's usually a trade that I can fade majority of times if I see that the rally in oil is based on fear rather than obviously organic growth. Okay, so where does the FTSE now obviously head in terms of direction? Let's try and obviously operate on this and try and give you some sort of perspective. Okay, so the weekly chart, as always, we're still within that red candle. The red candle upper body is the 6350 level, so hence the reason why the FTSE is struggling here at 6350. So bear that in mind in the weekly chart. And as you know, you have a H&S formation, just to retest the neckline is perfect before we start to sell off. So the weekly candle certainly remains in control. If obviously we take out 6350, then it's a totally different game altogether. Okay. Now the daily chart, we're still stuck at that fib 75%. Again, it's that 6350 zone. You can see here previous support equals resistance, and we keep hammering into that level and obviously starting to sell off. Now the 60-minute chart of the FTSE 100, we basically have this mini trend line. Okay, so again we're hitting into that trend line, and this is where I shorted the FTSE at 6346. Only to cover for plus 17 once I've seen the markets obviously starting to show some support. Now you can certainly see that this market obviously has retraced here, and so we have had this retracement from the 6223, quite a powerful one, almost 100 plus points retracement, and we are now hitting into resistance again on the FTSE 100 on a 60-minute chart. Now looking at the 10-minute chart of the FTSE itself, you have this diagonal trend line that certainly is holding, and that's exactly where I shorted based on that trend line. We can certainly look at weakness here. Now looking at this market from a hypothetical point of view, I would be expecting a potential H&S type pattern forming before we start to reverse. Now, support on the FTSE remains at 6220, so again, that's something that I'm going to be watching out and observing in terms of price action going forward, okay, on the FTSE 100. That certainly is a zone that's going to be of importance. Now, if that zone were to go in terms of the FTSE, then you have potential resistance equals support here, and that certainly is the next zone at 6280 to watch out for. Now, the FTSE today certainly took out gap level. We had this rally today, quite an impressive rally as such, and we actually took out the gap level at 63515 and continued to ascend and continue to rally, which was quite impressive today in terms of the FTSE 100. And as you see, the 6220 pivot lower, the market certainly started to rally ever since we had those geopolitical fears. So geopolitical fears, a rally is not based on fear, and therefore that one could expect that to reverse very quickly. So certainly bear that in mind when trading the FTSE 100. So that support level at 6320 is the next potential level to be hit on the FTSE, and then obviously we'll see once we break through. If we do break through, you do have the 200 MA at 6300 to act as support, and then obviously 6280. So they're the two zones that we're going to observe. Now, in order to cross-reference a FTSE in terms of the price of oil, that certainly is a major market mover at present, and you can see here the 60-minute chart certainly seems exhausted. We seem to be putting in potential lower highs in the price of oil now. Even geopolitical fears can't send this particular variable higher. So certainly indicating potential weakness on the price of oil, and therefore obviously the FTSE 100 too. Okay, so certainly you can indicate or expect weakness in the price of oil, and therefore we are going to potentially go lower. Okay, now the resistance zone on oil, as you can see here, is this level here at 43.5, and we have put in a lower low at 40.4. Whether or not that will be the ultimate double bottom on the daily chart is yet to be seen. As you can see here, ultimate double bottom has yet to be seen. But for now, we keep an open mind, and we shall see exactly how the price of oil moves in terms of the market itself. You do have an argument here for a potential inverted head and shoulders formation, so certainly remain open to that. You have this left shoulder here, and you have the head, obviously, which is here. You're looking for a right shoulder, and obviously off we go to the races on the upside. Given the fact that we have obviously broken out this downward trend line, okay, and you are looking at potential higher prices, but again, any movement as such is based on fear as opposed to economic strength. So always bear that in mind and be open to that as well. Okay, the movement in the price of copper, again, that will be an important variable if we are going to be trading. And you can certainly see the daily chart certainly still remains weak. We've had a slight pop, but nothing of any importance. 60-minute chart, we haven't made a lower low or a lower high. So again, there is an argument for an inverted head and shoulders. One could certainly argue for the price of copper to potentially start to reverse here, and one needs to be open to that. So we shall see exactly how this responds, and we'll see how it trades in terms of the price of copper. Looking at the Aussie and Kiwi now, Aussie and Kiwi, you can certainly indicate or see weakness here on the price of the Aussie. You can see a pivot high today was 0.7280 overnight. We've sold off ever since, and now we are looking at potential lower lows and lower highs. So Aussie certainly indicating weakness, Kiwi indicating weakness as well. We have reversed temporarily post the US job data, and we have put in an intraday double top. So again, if the Aussie and Kiwi are putting in a double top, then that, you expect the FTSE 100 certainly to indicate weakness as the dollar starts to strengthen, commodities start to fall. Okay, that's the thought process here. In terms of individual sectors, of the oil and gas sector, we can certainly look at the oil and gas sector. Again, we have attempted this rally. We put in a doji candle today, so therefore indicating weakness on the price of the commodity oil and gas sector. So again, indicating very similar to the price of oil, no real thrust higher of any importance. The 200 MA certainly seems to be the resistance zone at present, and we are looking for further weakness on that. Okay. The mining sector, again, still a feeble bounce. We are holding that double bottom, but just about, and there's no real conviction here at all. So again, indicating further weakness on the price of, especially in terms of the mining sector. Now, the retail certainly did have an uptick today, so certainly a bullish move today in terms of price action, and something that we're going to continue to observe. You do have this double bottom potentially being carved out on the FTSE, and again, we need to see whether it has legs, so it's going to be important going forward. In terms of the other sectors, let's just bring up the chart of the banks. Banks certainly is holding, the banking sector certainly is holding support and at this zone at 130. So again, we need further price action and further confirmation of actual strength and a continuation in the move higher. So potential support for the banking sector. The pharmaceuticals, an inside bar today, nothing of any major importance. Okay, the real market moves were the house builders. They were the ones that was actually keeping the markets afloat. Now, telecom sector certainly did push higher based on this upward sloping bullish channel. It certainly seems to be coming to an end now. You do have a potential lower high, and then obviously a lower low expected. Beverages, again holding resistance on the 60-minute chart. No real move higher, although we do seem to be an uptrend, but we are exhausting. So the beverages may well be the sector that leads the FTSE 100, starting to forces it lower. The insurance sector, very stellar, very impressive. A good looking chart here with higher highs and higher lows, and very, very impressive. Certainly breaking out here. So certainly a bullish signal as such. Okay, I need to bring up the actual the auto sector still. This is obviously of important in terms of the German markets to understand. The auto sector still remains weak. We had an inside bar today, so that certainly isn't good news, and you are looking for a potential lower high. Now, the only thing that I don't have here is the chart of the house builders, which is not a good sign. Okay, given the fact that obviously aerospace and defense, we are looking at this chart here. Certainly an impressive move higher, although one could argue that we are now potentially coming into resistance. So quite an impressive move higher in the aerospace and defense sector, and you are looking at resistance. So certainly a mixed picture here in terms of sector breakup on the FTSE 100. The next real move will be coming from the US. So the S&P 500 is still stalling at the fib 75%. So therefore you are looking for further weakness here. You have the key resistance at 2095. The markets still obviously have not hit that or touched that. You have this key diagonal trend line that's still being held, and you are looking for further weakness on the S&P 500. You seem to be coiling here. You're in this coil in terms of price action. You have obviously this pivot high here, and then you seem to be coiling here, and then you are looking for a potential move lower here, given the fact that you got geopolitical fears in the background, and therefore that you are looking at a potential risk off scenario on the S&P 500. Okay, that certainly remains a dominant theme, the geopolitical concerns and the uncertainty in the background. Now the global market ETF, or global market CRBQ, the commodity ETF certainly is, ever since it's closed that gap, you are looking at potential strength based on fear and uncertainty. Emerging markets have bounced as such, but given the fact that we are looking for a rate rise this year, you are looking at an unfilled gap below that needs to close, and therefore that's negative for equities going forward. So again, there's a lot of mixed signals here in terms of interpreting the markets themselves. The dollar index, looking at the 10-minute chart, certainly is into potential double bottom support, has put in support now, and is starting to move higher based on strong data and obviously geopolitical fears helping the actual dollar itself as well. So again, we're going to the alternative indices in terms of cross-verifying the strength of the FTSE 100. If you go to the FTSE 250 as such, go to your daily chart, and you did have a bullish engulfing, or you negated yesterday's bearish candle, but you are still facing resistance on the FTSE from the 17,200 to 17,300 level. We have thrust higher, and we are now currently potentially into resistance on the FTSE 250, so therefore you are looking for weakness on the FTSE 100. FTSE Europe, you can certainly see here you close a gap today. Again, it's a move higher, but certainly a feeble move. Nothing of any importance in terms of the FTSE 100. FTSE Top 100 or Euro Top 100, again back into horizontal resistance, indicating weakness of the FTSE. FTSE All Share, again back into resistance. A pop higher, more of a short squeeze bounce than the actual rally itself. Now the volatility index, or the FTSE volatility index, is now back into support, and therefore you are looking for a rally in the volatility index or fear index, and therefore that's obviously a risk off scenario for the FTSE 100 itself, and that's how we're interpreting it as such. So back to the FTSE again. Resistance remains at the 6350 level. Intraday we had resistance at 6347. Support is at 6320. If that cracks, you're looking at 6280 and then 6300 and 6280. So certainly looking for potential further downside moves. Okay, so that's my interpretation of the FTSE thus far. Again, key resistance zones. If we take out 6350, then the bulls are back in control. and we are looking at higher prices. That's my explanation. That's my insight in terms of the market itself. Your pivot high is 6370 on the FTSE. Whether we can test that, it's going to be interesting. But given the fact that, like I said, you have geopolitical fears, uncertainty, anytime you can have a comment, that certainly sends the markets lower considerably, whether it be from Turkey or whether it be from Russia. And the US, Mr. Obama does have a speech later on today as well, so we shall see. Okay, all eyes on the US markets. Given the fact that we have Thanksgiving holiday, etc., the volume may well be light and it could distort price action to a large extent. But again, we rely on our technicals and fundamentals to guide us, and that's how we trade. Okay, I think that's a wrap. Be sure to visit cfds.com for your trading needs. Goodbye now.